Hello, everyone. Good to be back. This is kind of a belated edition of my videos. I'm sorry, I've been traveling a great deal lately. Just got back from Europe. I attended the Flame conference, the Flame Gas conference. For those who don't know, the Flame conference is one of the largest conferences in Europe, and it's probably one of the most interesting ones. Where I've been attending for I think close to 10 years now, and it's always interesting people that show up. And we were discussing in the past a lot of the pros and cons of Russian prices and Russian gas. And this year, it seemed a much more comfortable event than it has been for the last couple of years. The last couple of years, of course, Europe's been a bit of a crisis, dealing with all the uncertainty in the markets. I think the feeling now is that we have kind of managed all the crises and everything seems comfortable. The prices in Europe are not that high. There seems to be plenty of supply. The weather has been cooperating as well. New infrastructures come in relatively easily in the last 12 to 24 months. I think people have been surprised how fast these new terminals have come in Germany and other places. And the terminals that are existing seems to be doing very well. We talked about the Lithuania terminal being expansion. The Croatia terminal seems to be very busy. There's lots of new things happening in the UK terminal, some new guys who have taken capacity. Venture Global was mentioned as somebody interesting, as now we're seeing American exporters actually take capacity in European terminals. It's the same playbook that Qatar has done in the past. Qatar actually owns some of the terminals, but just taking capacity in market terminals allows you to play a very strategic game. You don't have to sell your gas at the spot price if you don't want to. You can always just put it into your own capacity in the tanks and sell it into the local grid as you and when you please. So that was an interesting trend as well. But overall, the mood seems very relaxed. Everybody seems to be in a good mood. Um, you know, there is obviously wars still continuing. The wars in the Middle East seem to be getting worse. We were there just a few weeks after the Iran was bombed by Qatar by Israel, but everybody seems to be taking this all with a kind of in stride. What I did think was interesting was a couple of people mentioned about how we are back to the choke points of potentially of LNG. Obviously, the choke points in the Middle East, the Straits of Hormuz, the Straits in Yemen, Bab al Mandeb, those are choke points. But now we have choke points, of course, in the Suez Canal as well, and the Panama Canal. Not political, but kind of a technical weather-related thing that the kind of Panama Canal, because of the drought, can't take the capacity that we all wanted it to do. So what that really means is that ships that are going to cross from one basin to the other have much longer voyages. That may be a short-term issue in terms of how much that impacting shipping prices. Shipping prices are still relatively low. We do have a lot of ships coming online in the next couple of years. The order books are very full. The shipyards are going to be pumping out, I think, 20 ships a year for the next few years around in China, Korea, and Japan. So maybe the more ships will kind of grease the system, and there'll be enough capacity to move cargoes from one place to the other. But for me, I think it's an interesting kind of going back to the old days of LNG. When LNG trade first started, we had two distinct trades. We had the Atlantic trade and we had the Pacific trade. The Pacific trade started off with the Alaska LNG, the very small Kenai project to Japan, and then of course just blew up with Southeast Asia, especially Indonesia, Badak and Arun. Later on, it's joined by Tangguh and Sonoro, and the Malaysian projects and the Brunei projects are selling into the Japanese, then Korean, and then Chinese markets, and that was also boosted by the big Australian exports. That was the Pacific trade. The Atlantic trade was dominated by basically North Africa, initially selling into Europe. That's Algeria, selling into France and in Spain. And then there was enhanced when Trinidad came online, and Trinidad started selling into the American market a little bit as well as to the European market. And then it was boosted further by Nigeria and by Angola and by Norway. So we had two very kind of distinct markets. We had the trade that was going into Europe, the Atlantic trade, uh, typically oil linked, because Gazprom was an oil linked seller into Europe, and they did the pipeline exports. And so LNG, trying to compete in the same markets, also went to oil links. typically, or also they did sometimes electricity prices links to the European market. As UK became a bigger producer, a bigger consumer of natural gas, we started looking at NBP cargoes. And then when America needed LNG, before we started exporting LNG, and we still import LNG, of course, but when America started importing LNG, it was typically Henry Hub based out of Trinidad. So we had these two very distinct basins, the Atlantic Basin and the Pacific Basin was oil linked because you typically to the Japan crude cocktail, the JCC marker, which is an oil basket of a number of oils imports that go into a weighted average of oil prices into Japan. So that JCC marker changed every month. It was reported by the Japanese consumer, Japanese ministry, and so the rest of the Asian market followed that. When Korea came into the market, they followed the Japanese model. When the Chinese came, they followed the Japanese model. And India, to a limited extent, also followed that model. So we had the Atlantic Basin and the Pacific Basin. That started getting very murky when the Qatari export started at the turn of the century. And when Qatar became a larger and larger producer, suddenly Qatar was in this very enviable position of being able to sell to both markets. Before that, we had relatively small production coming out of Abu Dhabi, a little bit of Oman, but nothing to really move the markets. But Qatar suddenly had the big ships, the big volume, and they could sell to both the Atlantic and the Pacific markets. When the American producers started 10 years ago with Cheniere and others, they started selling to both basins. And we started seeing pretty much a murkiness of all the markets. Fukushima happened in 2011, and that's when Japan needed cargoes quite desperately, and the cargoes came from all directions. And so we really didn't think of the distinction between the Asian or the Pacific market and the Atlantic market. So now we do see a distinction. We're starting to see constraints happen in different parts of the world. As I mentioned, we have the Panama Canal, which is suffering from a drought, so less ships can go through that, making it difficult for Atlantic market basins, such for producers such as the U.S. to sell into Asia. So they have to go around South America. It adds a lot of time, 50% to their voyage journeys. Obviously, adds a lot of cost and makes the shipping much less efficient. We have the constraints happening in the Red Sea because of the war in Israel. And at some point, I was told that there was actually no cargoes, no LNG tankers traversing the Suez Canal because of the potential risk of them being, by the Houthis in Yemen taking out revenge on them. So we basically, and the insurance cost being so high, so we stopped seeing Qatari or Middle Eastern cargoes going through the Suez Canal to get to Europe, and they had to go around the bottom of Africa, adding time as well. So suddenly it made a lot more sense to say, why don't we just keep American cargoes in the Atlantic basin and trade out the different contracts. It all kind of works out, and keep the Middle Eastern cargoes and the Asian cargoes, exporters, Southeast Asian cargoes, and Australian exporters in the Pacific basin. That obviously is what you would do for every other commodity. Unfortunately, LNG tends to be a bit more sticky. We tend to have a lot more inefficiencies in the system. We have the long-term contracts. A lot of contracts have with supply restrictions, a lot of destination clauses that do not allow the ships to go to different places. These are all, I think, very anti-competitive, but that's the way the industry is. And just that, obvious logical efficiencies that we think should happen often don't happen. But maybe now, because of the external factors such as the war in the Middle East, such as the drought in the Panama Canal, we may see some of that efficiencies in the thing. We can only hope. But we may be going back to a place where we will have a more distinctive European Atlantic market, largely supplied by the US, maybe a little bit coming out of West Africa, and the Pacific market, which will be largely supplied by the Asian suppliers, a lot of the Qatari and the Middle Eastern projects, and potentially even the Canadian projects. And we keep those two kind of things separate. So I think it's an interesting time, as always, but much more comfortable. Prices seem to be at a very comfortable level. US natural gas prices very low. We've just gone through the winter. Prices are well below $2. There don't seem to be any real issues. The weather seems to be fairly cooperative at this point. And the European price and the Japan price seem to be in exactly where you'd expect it. Europe a little bit lower than Japan, but Japan not that much higher, or Japan or Asia not that much higher. So you notice I mentioned Japan a lot today because Japan used to be what I call, speaking for the market. They were the leaders from the market point of view. When we in the old days, when we used to think of LNG supply, there was a lot of suppliers, but the market was kind of led by the Japanese model. Japan was the largest consumer of LNG. It still is, but that may be changing. But Japan also set the stage. They set the pricing model. They set the S curve, which is the curve that stops higher and the lower bounds of prices. It was the Japan crude cocktail that was very dominant till more lately the Brent as the oil linked oil price. But Japan was where we used to look for leadership in the oil markets, in the LNG markets. That seems to be have changed now. I think Japan is kind of yesterday's story here. Japan's LNG demand is going down or staying flat at the best of time, but I think actually going down. Japan's nuclear restarts have been, I think, quite successful. I think they've taken advantage of the energy transition mood against carbon, and they've also taken advantage, I think, of the problem in the Middle East to push through the nuclear restarts. So Japan's getting increasing amount of nuclear. And Japan's also kind of dabbling in all these exotic fuels, hydrogen and other things, which hydrates and things like that they've always looked at, but now even things like hydrogen and ammonia. So is Japan going to speak for the LNG markets in the future? I don't know. I think Japan had a unique position. There was a number of very large utilities. There were big LNG buyers with a lot of credit-worthy banking behind them, and they competed ferociously with each other. Now, I think that we are seeing consolidation in the Japanese market. The JERAs of the world have really taken over a lot of that. And they're becoming trading houses. They sell some to Japan, some not to Japan. And even the Japanese end consumers now are reselling their cargoes. So Japan no longer speaks for the end user. So the question is, who does? You would think Korea should. Korea is obviously a very large market, but Korea is a single buyer for the most part. And they've always kind of stayed below the Japanese radar. They've always got better prices in Japan, but they really haven't really driven the LNG markets as much. Uh, China, for political reasons, has chosen to stay low profile in the LNG markets. It's a huge buyer of LNG, but doesn't make a big stink out about it. You don't hear a lot of interesting comments or market commentary coming from the Chinese buyers. They tend to be price takers. And now with the Chinese going to be an increasing buyer for Russian gas, they probably don't want to make a big waves in the rest of the LNG market. India could also play that role, but India has been traditionally a low price, kind of a very price sensitive market. It buys a lot more LNG when the prices are low and buys a lot less when the LNG prices are high. And India also gets very much sweetheart deals from Qatar, and probably doesn't want to make a big stink in the market, talking too much about the market in order to stop any jeopardization of their Qatari deals that they get. So we're actually in an interesting situation. The next logical person to be the speaking on the market should the Europeans, but the Europeans tend to be, I think, a bit more of a disparate market. There's many different markets going on, and many different buyers. But maybe this is a role that the vacuum the Europeans can play now that they are going to be increasingly dependent on LNG to actually start speaking for the LNG market more. And I think we might see that trend in the future. Obviously, the sellers of LNG are spending a lot more time in Europe. I'm spending a lot more time in Europe speaking to the European buyers than I did in the past. And I think that reflects the increasing importance of Europe in the global markets. Another interesting observation I have is kind of discussing African LNG. African LNG has always been the big prize. There's a lot of gas potentially in Africa, some gas discovered, some gas to be found. But Africa is obviously not an easy place to do business. There are the below ground factors. There's not a lot of data. It's very expensive to drill, to explore, to find gas. And once you find gas, it takes a long time to develop. Then you have the above ground problems. I mean, not only the obvious things such as in Mozambique, we have an ongoing civil war, not sure what's going to happen with their onshore projects. I know Total saying they're going to restart or they have restarted, but it's not that easy to get that doing. The costs are going to be very high. We noticed there was some news this week about BP maybe not developing the big field that they discovered in Mauritania. The Torture project that's been in development has been repeatedly delayed. I think it's like 6 years delayed now. I know the FPS FLNG ship vessel is on the location, but it just seems to take its time to get really started. I think Mauritania is has been a big prize, a potential prize for a long, long time, and we just see a lot of difficulty getting projects going. Tanzania is another one where there seems to be a lot of gas. There was a lot of excitement 10 years ago. And again, excitement kind of brewed again a couple of years ago when it seemed like the projects might actually move ahead. There's a lot of big companies there. That's probably the biggest problem is there's too many big companies in the pot. In Tanzania, you have Exxon, you have Shell, you have Equinor, you have others as well. Everybody trying to maybe push their weight around. In the end of the day, nothing seems to be happening. The government is supposedly renegotiating the terms yet once again. We see the only real excitement or real, I think, real potential is offshore Mozambique. I think ENI has done a tremendous job with the FLNG. Maybe FLNG is really the answer for Africa. FLNG, the Healy project in Gabon has gone very well as well. There could be some more smaller FLNGs in West Africa. Of course, let's not forget Equatorial Guinea. Equatorial Guinea has been a producer of LNG for a long time. Stayed below the radar, relatively small, very cheap project. I think very lucrative, very very good project. But then on the opposite side of the scale is Nigeria, where they have really struggled with expansions, really struggled getting any new projects going, and even the latest trains took a long, long time to happen. So we all want Africa to develop. I think that Africa could be a very good place for more future LNG. People like the World Bank and the IEA, who are, I think, forcing Africa to think of energy transition faster than it should, are probably hurting Africa's prospects by making it difficult for African companies, African countries and companies and foreign companies to develop and finance African LNG or gas projects because of the energy transition stuff. Only ensures that Africa will stay in energy deficit for a lot longer, and that's a sad thing for everybody. We need, Africa, I think, still has 1 billion people that don't have enough, reliable electricity, and that would be a shame that because of the West kind of putting a halo on itself and saying that we want to be in energy transition and net zero, we deprive African countries and African people of the right to consistent and probably low carbon energy such as natural gas. So I guess what it's saying is that a lot of the supply demand forecasts think that Africa is going to be a massive producer. I think the history shows that it's not so easy to develop projects in Africa, and they take a lot longer. My advice to any governments, any companies is not go big, go small and get started. By going too big in maybe in onshore Mozambique, too big in Tanzania, maybe too big in Mauritania, we basically stop projects from develop. Better to have done a 1 or 2 million ton project, Equatorial Guinea size, and get things started, get some revenues, get a track record, than trying to be colossal 20 million ton project that then never happens. That's my view at all. So anyway, things are going very well for Gulfstream LNG as well. We are now on the FERC maps. If you download the FERC export maps, we have a docket number and a FERC map. We're waiting for the notice from FERC to officially begin our pre-filing process. We hope that comes very, very soon. And after that, we'll begin the FERC process. So it's a very exciting time for Gulfstream. And it does seem that we are the first new greenfield project in America to be in the FERC system in 5 years. And if you look at the FERC map, you'll see that the last project before us, the most recent project before us is Delta LNG that was filed in 2019, and we have filed here in 2024, the pre-filing filing. So keep abreast on what's happening with Gulfstream. It's all very exciting. And other than that, I don't expect a lot of FIDs this year in the US, especially. It's good to see a little bit of excitement happening in Canada. Let's hope this is not a boom bust cycle again like we've seen in the past. But the pause in the DOE has definitely dampened the mood of American LNG. I hope the pause is temporary. I get every indication that it is. I think the DOE and other people are probably taken aback by the amount of backlash they received because of the pause. And yes, it's political, so it's very hard to reverse it now. Let's hope that no matter what happens at the outcome of the elections, that the pause is the one thing that all parties agree that should be removed as fast as possible, so we can continue developing LNG export projects in America and supplying really low price gas to the world. I think it's safe to say that any companies out there that had long-term contracts to receive supply from the US over the last 5 to 10 years have done very, very well. Or even with all the fluctuations we have seen and the volatility we've seen in LNG prices, those with Henry Hub contracts are laughing. And I think I see no reason that's not going to change that should change in the future. Henry Hub prices are going to stay low. American LNG liquefaction costs are low. The supply is reliable. I encourage the people to always look at America as a low cost, reliable supplier as well. And without the volatility that we have with oil link prices, and without hopefully a lot of the government control. I know the DOE kind of changed that argument a little bit, saying that it has a little bit of control. But I would like to think that America is full of the companies in America are independent, commercially minded companies that once they get the permit, they sell the gas wherever it makes the most sense without a lot of government interference. Okay, thank you very much. Hope you enjoyed this video, and we'll look for comments. Please feel free to leave them, and we'll see you next time. Thanks.